Welcome back, financial investors. My name is Brent, and today we're going to be doing our weekly recap for August 12th to the 16th, 2019. We're going to start off this video by looking at last week's changes for the week, which are up on the screen now for the 5th through the 9th. So we came out of a negative week, jumped into another negative week. Now, in this video, we will cover the four main indexes, the performance of them, take a look at the entire S&P 500 by sector, what sectors were stronger than others this week. Maybe there's some possible deals out there after this sort of volatility. And we're going to look at financial semiconductors. I am going to go ahead and share a few financial stocks that I believe have been beat down, and these are a few that I quickly screened over, so you will have to do a little bit more research, but I'll go ahead and get them out there, that way you can do so. We're also going to look at oil, which is positive for the week, surprisingly, the dollar, silver, gold, and mortgage rates. So if you are brand new to the channel, have not yet subscribed, hit that subscribe button below. I cover the stock market, dividends, and real estate. If you do enjoy this video, find it helpful, hit the thumbs up. And if you have any comments or questions, would like to let me know what stocks you are planning on buying or buying this week, drop it into the comment section, or head over to the Financial Investor Facebook groups and join and discuss those there. So let's go ahead and kick off the video. So last week's changes, S&P down almost about 0.5% there. The Dow Jones and the Nasdaq down 0.75 and 0.56, and my portfolio was down about 0.16%. So overall, all indexes there and my portfolio were negative last week. Now, jumping into the S&P 500 performance this week, we could see a bit of a sell-off here on Tuesday. Now, the main thing here that caused this was that there was an inversion. I believe it was during intraday on Tuesday, and we saw that it came very close to having the yields invert, but they did not quite invert. And then when we closed, they closed uninverted. So there was a big scare off that, but we did have a hard sell-off on Wednesday down due to that, down 3% there, and Wednesday will be our biggest loss for the week. But overall here, even though we lost 3% on Wednesday alone, we can see that on Tuesday and Friday, the indexes overall were pretty much positive, and we did end down 1% for the week, and still up here to date 15.23. Now this sort of process repeats across all the indexes. So here, Monday and Wednesday are the weekdays, whereas Tuesday, Thursday, and Friday are stronger. Now the Dow Jones did fall a little bit faster than the S&P, down 1.53%, and this is due to Walgreens and I believe a few other positions that didn't do so well this week. Now the Nasdaq actually came in better. It didn't fall as fast as the S&P or Dow Jones. The Nasdaq, which has fallen pretty hard these last few weeks, only fell down 0.79. It still remains in first place of the three main indexes, up at 19% year to date. And the Russell 2000 down 1.28 year to date. I believe this one's actually in almost, okay, it's now in fourth place. So 10.76. So it is now in fourth place. So it has been beat up here recently, and it's kind of caused it to kind of get pushed behind the Dow Jones. Now, taking a look at the markets here on Friday, lots of green out there. Just about every position in my portfolios were pretty much positive. There were a few, I believe, such as CVX, the oil one. I do own this over on the M1 Finance platform. This was one of the negative ones in there, but overall, we also saw a few utilities such as Southern Company get a little bit weaker, Duke Energy, and American Electric Power. So maybe a couple of financial investors out there who are also looking at the market and trying to maybe move out of safety. Now, we've seen that volatility and the yield inversion sort of flashing out there, and that may be a sign that the Fed will continue to cut rates here towards the end of September. We may expect another 0.25 to even 0.5% cutback, and that'll help that rate inversion kind of mellow out for now, but I do believe it'll continue to take place into the future, because you can't just put more money and debt into the market and try and fix things. It's not how it works. But looking at the 1 week performance here, overall, there were a few sectors out there that were doing a little bit better than others. Now, Walmart came out, killed their earnings, guided higher, up 5.32% this week. They really helped out my portfolio over on M1. I do own Walmart over there. I also have AT&T, which is actually trading at almost its highs for the past year. It's almost at $35. I believe maybe in the 1 year range, it's been in the $36 to $39 range, but a lot of investors are pretty upset with AT&T when it did drop into that $27, $28 range, and I believe there was a lawsuit out there for investors having lost money. But overall, AT&T continued to raise their dividend, continue to pay it out, and now they've returned to $35 per share. Verizon also out there. If you own any of these in your dividend portfolios, they would have been paid out, I believe, earlier this month on the 1st. So those are some great telecom. Also down in the services, you can see Apple jumping back up to that 206. Now, I do believe that Apple will be short-lived as September begins to roll around and those tariffs that were postponed will actually get enacted. You'll see Apple begin to sell off, maybe back down into the 190s, or who knows? We shall see. And Coca-Cola, Pepsi, also some consumer staples, very strong. Both of these companies are basically side by side there, with Pepsi just coming out just slightly, about 1% overwards, almost there. But really good there. And the rest of the market just kind of slowly bled off, and this is what caused the S&P overall to end up negative. We can see patches of positive there with Nvidia, Intel, consumer, and such, but overall just kind of dragged down. I'm not sure what to expect next week. We shall see. I think everyone is kind of looking at that yield curve and possibly looking at the Fed cutting it in the future, which will make being in cash not optimal. So financials sold off pretty hard this week. We can see over here in financials, Wells Fargo down 4.13, Bank of America down 4.59, JP Morgan down 1.84, and Citibank down almost 4% there. So I'm going to go ahead and share these financials with you now. Now the first one is First Financial Corp. We can see here up for the 5 days, up 0.31%. They're being positive in the week, whereas the rest of the indexes were negative. We can see here this one pulled on just slightly here, down up 0.31 year to date, positive up 3.66. This is a dividend aristocrat that I posted over my website. Now, this is another one here, Tompkins Financial Corp, ticker symbol TMP. The other one here was ticker symbol THFF. These are all dividend aristocrats. That is why I want to kind of bring them to your attention. That way, if you are looking for some financials that could be of beat up here but are showing some positive signs, maybe check these out. So this other one here is ticker symbol TMP, up this week 0.86%. You can see year to date up 4.32%. We also have First Source Corp up 12.37 year to date. Now this one here on the week is at 0.94%. So this is one of the stronger of the few here that I'm going to be showing you, up nearly 1% for the week. The other here, GWW. Now, this is not a financial. This is actually an electrics wholesaler. So not a financial, but this was an interesting one out there. I was looking for dividend aristocrats that have grown and paid out dividends for the past 25 years that have actually been positive this week. So I actually have their data here on the other screen. I'm just kind of reviewing these here, and we can see that this one has a starting yield of around 2%, 2.14. It pays out $5.76 per share each year. It's priced about $2.69. And it has a very low payout ratio at 35.9 with 47 years of growing and paying a dividend. So very strong looking company there. And you can see here, overall, if I were to kind of show you their performance here, they are trading in the 1 year pretty hard. This is where their support level was. So this could be an interesting one to check out. And that's why I want to kind of share that last one. So that's not a financial, but I still wanted to share it. And then we jump back over into the semiconductors, which have been beat up recently over these past few weeks, along with that NASDAQ, actually positive this week, up 0.37%. Home builders, Lowe's, and Home Depots, they were pretty much pummeled this week. So that brought down the whole ETF here, XHB, down 1.19. Now, jumping over into oil, if you want to pause this video and go take a look at this, I didn't actually see what took place on Tuesday to have caused oil to have spiked as high as it did. Now, on Tuesday here, we can see a huge run up for oil, up 4.49% on the day. Ticker symbol USO here on this one, which I use to track the oil, up for the week 1.06, all pretty much brought up there from Tuesday. You can see some basically selling off all that it gained on Tuesday. Went up 4.49, down 3.62, and it for the week up 1.06. Now the dollar is getting stronger. So I'm actually surprised with the Fed having cut rates. President Trump's been asking for a weaker dollar, but here we have the dollar continuing to move higher and higher. Now its highest point here for the 1 month is about 98.52. Now for the year, this is almost at some of its highs. Here we can see 98. So it's hitting up against these walls. Now, this along with the yield inversion is what a lot of investors out there are kind of looking at as a possible sign that the Fed will continue to let's push some money out into the markets, dropping down the value of the dollar, raising inflation a bit to meet their mark, and also kind of stimulating the economy by dropping rates down. So there were big discussion with China, and I believe the U.S. also floated the word out as stimulus packets. That was a word that was floated out this week that made the markets pretty much recover and move back towards high. So kind of interesting. Gold and silver continuing to move higher and higher. Now gold, I feel it's super extended here in the short term. You can see here kind of trading at that $16 point. Now I do believe here the silver doesn't have much more room to grow, but we may see a big drop here in the future. But again, we see the stock market trading near all-time highs. We see gold trading near all-time highs for the short term, for the 1 year. We see silver also extended here in the short term. So there's gold overextended there in the very short term. Silver here, we take a look at the 1 year here, overextended here in the short term. Now also, you would think, okay, so if bonds are, if gold is overextended, silver is overextended, and the markets are trading all-time highs, maybe some bonds. Well, even bonds, if you look at bonds year to date, even bonds are overextended. So right now, a lot of investors are kind of scratching their heads. They're looking at indexes having a huge run up here in the past year. It's pretty much almost unheard of to see bonds move up 7.10% in a given year. But it is happening here in the short term. You can see that constant growing here within the bonds. So I've seen a lot of investors possibly considering moving from bonds due to being overextended. But where are you going to move to? Stocks are trading almost near highs. Gold and silver are also overextended. But again, if the Fed does cut rates, if the Fed does push out a stimulus packet, which I believe will come here towards the end of September, that will bring the markets up to that 10 or 20% high that I believe will go into the future. It's kind of weird out there, but I do see it kind of taking place. Mortgage rates have remained flat here on the week, so they remain unchanged for the week, but it pretty much remains flat. So this is where it's going to be at for a while, and I believe this is a great rate. I've seen a lot of real estate investors refinancing homes. I get so many things in the mail. You have $100,000 in equity you can refinance and get back in your pocket. I don't want to be refinancing right now on my properties because that restarts my countdown for my payoff. I forgot what it's called, but I don't want to be refinancing. I already have a locked-in rate of 3.25 for my personal home, and my real estate properties are about a 4.75 and 5.6. So those are pretty well. Now, I actually have some more breath in me, so I'm going to go ahead and cover some of the stuff that was posted over on Facebook this week. If you guys want to tune in for that, definitely tune in. Now, I shared an article over from my website. Now, I went over the dividend portfolio update for July. Basically went over what stocks paid out dividends in July. Also, what stocks I sold. I did sell out of some positions last week. You saw Apple, Medtronic, MDT, Coca-Cola, and Apple and Cisco. So I did take profits in a few positions and also moved out of others. I just saw them hitting some resistance, and I kind of want to move those positions into some other equity. So that's what I did there and kind of showcase that. Now, I do have Bumped app. So if you guys are interested in checking out the Bumped app, there's no referral benefit for me or you. It's just if you're out there and you like to shop at Kroger's or Lowe's or Taco Bell, and every time you use your debit card or credit card when you attach it to this app, you get points. So here, for example, I got 19 cents back from Kroger's for shopping at the store. I just paid my Verizon bill, and I just made like 63 cents for paying off my Verizon bill. So it does look like this is not going to be working here. I'm going to go ahead and try and refresh it, and that may not work. So instead of going over Facebook, so maybe Facebook's kind of crashed out, or it could be my connection. But I did post a few posts over on Instagram. If you guys aren't following me on Instagram, jump over to Instagram. I do have links in the description below this video to jump over, check it out, follow along here. I try and post some interesting things, my buys and sells for the week, how the stock performance has done overall, week to week. I kind of keep these up, so every week I post them over on Instagram. I also kind of do funny memes that I either find or sort of, I do have a vacancy that came up here this week. So I got my rent check for, for August, and there was no rent paid from this property just due to it being empty now. It's going through a just patch up, paint, no major construction, and then it is looking for another tenant to get that rented out. I need to talk to my property manager because I do not want to be paying for water anymore. Water, so initially I decided I wanted to pay for water and trash. That way there will always be water running in the sewers and stuff just won't get plugged up or frozen. And trash, because I don't want piles of trash getting piled up at my properties, and I want to make sure that they're not doing that. And I think I'll still cover trash because that's a set amount from waste management, but the water bill does seem to fluctuate, and if I put it on the tenant, they will look at it better themselves and try and control their water consumption. So that is something I will be reaching out to my property manager to make sure that it is in the next lease, that the tenant will be in charge of electric, water, and a few others. I forgot what the other ones are, but gas and such. And that is essentially it. So this week we saw the S&P down 1.03, the Dow Jones down 1.53, 1.03 for the S&P, Dow Jones 1.53, and the Nasdaq they're down 0.79. Now my portfolio didn't fall as far there, but still took a beating, down 0.54%. Now that is pretty much all I wanted to cover in today's video. It doesn't look like Facebook is working out for me here, so I will be jumping out from that point. See if I actually load up on another screen, but I don't want to make this video too long, and that is pretty much all I wanted to cover in today's video. So again, if you have not yet subscribed to the channel, I would appreciate it if you do subscribe. If you do decide to leave a comment, if you want to ask a question, want to have something shared here on the channel, I'm looking for ideas to cover. So if you have some other ideas, I will be looking to discuss stock market related, dividend related, and real estate related topics, and I'll be more than likely writing them out over on my website first, like a nice template, or what's it called, outline that I'm able to kind of follow, so I could do a little bit of research or just kind of wing it as I do on a lot of my videos and just kind of go off the top of my head. So that is it for today's video. If you guys did enjoy this video, definitely hit that thumbs up. I appreciate it, and I will see you next time. Have a great day. Bye.